So what we're going to look at is an overview of what Forex is. This is what we're going to look at, an overview of what Forex is. Then we're going to look at number 2. We're going to look at what is a broker. And then number 3, we're going to look at applications used in trading Forex and how to use them. So these are the things we're going to look at today. And then once we are done with this, in our next call, we can now begin to look at what is pips, what is other things that we need to look at. So this is what we're going to look at today. Let me just break this down. So we're going to take what is Forex, what is a broker, and then applications in trading Forex, and then how to use them. So the goal is that even as you are learning, and so our idea or what we're looking at achieving is that even as you're learning, you're also earning. We're going to look at an overview of what Forex is, then what is a broker and application used in trading Forex. So the essence of understanding these applications also is so that as we are trading, you can, even if you want to practice trade, if you want to practice some of the things we'll begin to teach you, you'll be able to know how to use it. So we're not going to rush this session. We're going to have a session today. What is Forex? You've been hearing Forex, and of course, I believe that the sole aim that you're here is to make profits. You want to make money out of it. You're not just learning it, you want to learn it and then add it to your certificate or add it to your CV. You're learning it as a skill that you're going to use to make money. For crying out loud, so many this market has made so many persons billionaires. This market has made so many persons billionaires. Like it's the largest financial market in the world. Like it's the largest and most volatile financial market in the world. When I mean so many persons are doing different business of buying and selling and doing different things, but you come to see Forex is the largest financial institution in the world, where you have up to $6.6 trillion circulating around the market on a daily basis. So you see that you coming into the market, it's not the market, and then the market initially was not even designed to make you profits. The market was designed to eat your money. So if at all you want to make anything out of the market, you have to know what you are doing. You have to learn very well. You have to understand the techniques lying down in it. So it's a very beautiful opportunity to make as much as you can. And then if you are very good in the skill, come on, you can make as much as you can. You can pay yourself whatever you want. There are guys that make up to $1 million on a daily basis. There are some persons, in short, I'm going to be showing you some pictures as we go on. You see some banks and then some individuals even making up to $22 million in a day. It just depends how good you are and then the amount of capital you have. So I know that you came here to want to learn. And out of that $6.6 trillion, just imagine people loss are there and people gains are there. So what you make in the forex market is somebody else's loss, and then what you lose is somebody else's gain. It's just a market where we have so many things happening, right? In the market. So you're welcome to learn what it is, and the best way you can even make the most out of it is just to apply yourself to it and give yourself to commit yourself to learning it. And at a particular point, the journey is going to look so discouraging. At a particular point, you might lose some money that you want to just quit. At a particular point, you might just start going, and then you're just asking yourself, does this even worth it? Come on, you've lost a lot, and then you are not making process, but you just keep on pushing till you get to that very end, till you get to the end of the tunnel where you now begin to see the lights, fam. So it's not going to be easy. Let me just let us know from the beginning. It's not going to be an easy journey. It's a journey that requires dedication, commitment. Because if it's for losing money, you will lose money. There is nobody in this planet Earth that started trading forex without blowing account. So you will definitely blow account. So your emotions can even change a little bit. Because even in the forex market, you don't trade with emotions. You have to be dead to emotions. You have to be dead to fear. You have to be dead to so many things, and embrace skill and a very good psychology so as to be able to be profitable. Right? So that is what it's all about. So what is forex? What then is forex? Forex for short simply means foreign exchange. So this is site Investopedia. Any terminology you see in forex and you want to make more inquiries on it, you can just go to this Investopedia and search for it. You can get it there. So what is forex? Forex is a short form for foreign exchange. And then what is foreign exchange? Foreign exchange simply has to do with the transaction between two currencies. So for example, the naira, you're in Nigeria now, and then the currency you're using what is naira. when you go to the US bank, for example, when you go to the US to want to spend your holidays or to visit anybody, you don't spend in naira over there. You spend in dollars, right? So you have to convert what? You have to convert your naira to what? To dollars. So foreign exchange just has to do what? Is a market, is a foreign exchange market, is a global market for exchanging national currency. So this market is a market where you exchange, you just so many countries are exchanging currencies. So you have naira, you want to exchange it to dollars. You have dollars, you want to exchange it to euros. You have euros, you want to exchange it to pounds. You want to exchange it to Japanese yen. You want to exchange it to Ghana cedi. So all those things, just that's what the foreign exchange market is all about. So how then can somebody make money out of this, or crying out loud? Or how then is somebody making can make money? And then one popular question people ask is that will forex ever crash? Well, the answer to that question is this: as long as we don't have a one word currency, forex cannot crash. The only time that forex is going to crash is when what we have a one word currency. That means there will not be need for what exchange of currencies in the world, where everybody in the world is now using one single currency. That means there will not be need for what foreign exchange, because no matter the country, no matter the place you travel on planet Earth, you can use that currency. But as long as we are not using a one word currency, Nigeria has naira, US has the US dollar, Canadian has the Canadian dollars, and all those things. Forex is going to continue to stand because you will continue need that there will be a continuous need for what an exchange in the market. There will be a continuous need for an exchange in the market. So, and then how then do somebody become profitable? How then do somebody become profitable in this market? You come to realize that in forex market, that in the olden days, or back in those days in the early 90s or early 80s, the people that were only allowed to trade forex are what the big banks and institutions. Individuals like me and you, they don't trade forex. If at all you even want to trade forex or trade commodities or trade stocks, that is something that maybe you read accounting, or you read economics, or you read something that is related to that, or you're working in the big banks. That is the only way for you to trade. It was not open for individuals to trade. You get so how then? So, but by the advancement of technology now, it's now that such opportunity now started coming down to individuals. They call us retailers in the market. You get so such opportunities started coming down to us. So, but how then do somebody make money in forex? So forex is all about buying and selling, right? It's all about buying and selling. That is what you do in the market every day. You buy and you do what sell. So many persons are buying every day in the market. Many others are doing what selling every day in the market. So you have naira, and then you're looking at what okay, sorry, let me add this to our course outline. So, what is Forex? Number two should be what is a base and a quote currency. Then this will now be number three. And then this will be number four. All right, I hope we'll be able to finish this today. So in the forex market, what happens daily basis? What happens on a daily basis is what we sell and we buy. You buy and you sell. You buy and you sell. You buy and you sell. You buy what and you sell. You buy and you sell. How do you buy and sell? For example, if you go to banks, I don't know whether you've gone to bank and then you see this exchange board where they write different currencies and their value and then their exchange rates if you want to do exchange. I don't know whether you've seen that kind of thing in bank. That is almost like what forex is. So for example, now you come and you have, let me say, you have 10,000 naira with you, and let me write so we can see it. So let me just take text. So let's say you have 10,000 naira. Let's say you have 10,000 naira, and the value of dollar as at this time, for example, I'm giving an example. Maybe you have 10,000 naira at hand. You have 10,000 naira, 10,000 naira at hand, and then the value of dollar now happens to be 500 per naira, 500 naira for $1. So let's say you have $10,000 at hand, 10,000 naira, not dollars now. Let me realize it. So you have 10,000 naira at hand, and then the value of dollar, right, is 1,500 naira per dollar, right? And then you now enter the market, and then you see that the exchange rate, that's if you want to buy $1, you're going to have to pay 500 naira to buy $1. And then you now look at the US economy. And then from what you can now predict from the US economy, maybe the new president that came in or whatever that is happening in the US economy, you can now see that wow, there's an evidence that in the next 6 months, dollar is going to gain against the naira. That is maybe in the next 6 months, dollars is going to so add much value. Maybe in the next 6 months, from the way the US economy is going, in the next 6 months, dollar is going to so rise, and then the value of dollar is going to rise. Maybe let's say in the next 6 months, uh, next 6 months, the value of dollar then equals 800 naira. So let's say you have 10,000 naira now, and then at that particular current market price, the value of $1 is what 500 naira. You get. So if you want to purchase a with your 10,000 naira, you want to purchase all the dollars. How many worth of dollars? How many dollars are you going to have? You now have what 10,000 naira divided by 500 naira, right? So that's going to give us how many? That's going to give us about 500. No, is it 550 dollars? Am I right? So 10,000 naira divided by 500 is going to give us about $20, right? So let's say you have 10,000 naira and then you want to invest that naira into buying dollars. You have, if you invest that 10,000 naira at the particular point where dollar is what 500 naira, how many dollars will you be getting? You're getting only just $20, right? So you'll be having $20 if you happen to invest your complete 10,000 naira into the market and say, okay, wow, dollar is going to rise to 800 naira in the next 6 months. I want to buy dollar now that it is it's 500 naira. Then in the next 6 months, I will sell it off back. So you now happen to buy dollar when it was what 500 naira, investing your complete 10,000 naira. How many dollars will you have? If you're having up to $20, right? So because 20 times 500 naira is going to give us 10,000 naira, right? So you have up to $20 at hand. And that means you're now holding your $20. Then only to come back in the next 6 months, and then the value of dollar now happen to increase to 800 naira. What happened? You now say, okay, now that it has increased, you now want to sell back. So you will now be selling 800 naira what for per dollar. That is not going to give us 800 naira times $20 which you have at hand. So when you calculate 800 times 20, that you should now be getting how many? That's about, so you should be having about 16,000 naira. So in the space of 6 months, right? Make how many naira profit are you able to make? You're able to make 6,000 naira profit. That is what happens in the forex market, right? That is what happens in the forex market. So on a daily basis, on a daily basis, you just see these things happen. So you come tomorrow and then look at wow, say okay, you have 500,000 naira, but dollar is going to rise. Why don't I invest this 500,000 naira buying dollars? So you invest it and then buy all the number of dollars you want, only for you to come back in the next 6 months and then say what I want to sell it off. That is what forex is all about, just buying and selling. You continue you buy it when it's low, and you want to sell it when it's what high. So when price of dollar is low or price of an asset is low, you want to buy it in much quantity. When the price now happens to increase, you now want to do what? You want to sell it off, thereby getting your profit back. So that is just what it is. That is what we do in the forex market. That is what we do what in the forex market. So it has to do with the exchange of one currency to another. It has to do with the exchange of one currency to what to another. The exchange of what one currency to what to another. That is what forex is all about. So then what is now a base and a quote currency? If you begin to trade forex, you begin to see some things like this: euro, USD, right? You begin to see some symbols like this. What does this mean? All right. So you always see something like this, Euro USD. Sometimes you see GBP USD, you see various things. So what then does this mean when you see such a thing in the market? This is known to be what? A base currency, whereas this is known to be what? This is going to be a quote currency. So what then is a base currency and then what is a quote currency? For those of you that have read that baby pips, you should have understood or gotten a view of what this is now, right? So, but let me just explain it here for the purpose of explanation. Then for those of you that have not gone through baby pips, so a base currency, for example, now we have two currencies here, and then forex. For example, now we have two currencies there. And remember what I said forex is? Forex is simply what? The exchange of one country's currency to another country's currency. So they have to be two different currencies exchanging. You don't exchange naira for naira. You can only exchange naira for Ghana cedis. You can also exchange naira for euros. You can exchange naira for dollars. You can exchange euros for dollars. You can exchange pounds for what? Dollars, or dollars for pounds, or pounds for Japanese yen. So this exchange is always what happens. This exchange is always what happens. This exchange is always what happens. So when you see something written like, for example, Euro USD, what they're trying to forecast is that, or the exchange that is trying to happen for that particular asset is an exchange that has to do what the euros and what the US dollars. The euros and what the US dollars. That's what they're trying to exchange. That is the kind of exchange rate you're trying to have. You want to try to exchange the euros and then the US dollars. This is the two currencies. So in the case where you have since sorry for the distraction, fam. So you have forex now, and then it has to do with exchange of what two country currencies, right? So what now happens? You have a base currency and what a quote currency. A base currency simply means the currency you have. That is the one you have now. For example, the currency you are trading it. For example, now you have naira and you want to exchange naira to US dollars with US dollars. Your base currency is what? The naira. The quote currency is what we call that US dollar. That currency you want to do what? Change it with. Change it with. So if, for example, now you are buying Euro USD, if, for example, you are buying Euro USD, the only thing you are trying to see, for example, now you have two currencies you're trading with, the Euro USD. What we call the base currency simply was the Euro, and then what we call the quote currency is that USD. So what it simply means is that you have Euro, and then you're trying to exchange it with USD. So whenever you are buying a pair, because this is called the currency pair now. So to be able to trade in the forex market now, you have to it involves two currency pairs. So and then that two currency pairs, as this case may be, is now what as we have here is what is called the euros and then the USD. What is forex? Forex is the exchange of two a country's currency, a particular country's currency, and then another country's currency. So trading in the forex market involves the exchange of two currency pairs or any asset at all. You just have to do it an exchange of a particular thing and another thing. So as in this case, maybe now you want to trade euro USD, you want to trade euro against the USD. Whenever you are now buying euro, euro in this case now is what? The base currency. The first currency that you always see is called the base currency, and then the second currency that you always see is called what? The quote currency. So in a case where you are looking at the market, or you are reading news, or you are just looking at what is going on global in the market, and then you are forecasting that tomorrow Euro USD is going to gain strength more than the US dollar. So maybe a news came up and then they say, wow, the euros is going to gain more strength in the sense that the euro is going to gain more value. That's what I mean by strength. That the value of euros is going to add to in comparison to that of dollars. Let's say euro is sold at 70 naira and then US dollar is sold at 100 naira. And then tomorrow you now look at things and say, wow, that in the next 2 months, Euro USD is going to be sold at 200 naira, whereas US dollars is still going to be sold at 150 or is going to be sold at 150. So you're looking at, wow, in the next future, that Euro USD, or I mean Euros, is going to gain more strength compared to the dollars. That is now in the case where you now come and say, wow, I want to buy the Euros against the dollars. So you now look for that pair called the Euro USD pair, and then say, okay, when buying Euro USD, you are simply having a bias that in the next future, Euros will be stronger than USD. That is why you now come and say, okay, wow. So in the next 7 days, or no, in the next, let me say, 7 months, or in the next 6 months, or in the next 2 months, that the euros is going to have more value in the world economy compared to the dollars. So you now want to come and say, wow, say, I haven't seen this. Yeah, you want to be buying euros against the dollars. That is what this base currency simply means. So each time you are buying euros, you are buying it against what? The dollars. But if you now come, so but when you are selling Euro USD, you are simply having a bias that in the next listing future, Euro USD will be what? Will be weaker than the dollars, right? So when you are buying Euro USD, for example, this pair now, you're just simply saying when you are buying this pair now, as the case may be now, you're just simply saying that in the nearest future, the euros is going to have more value than the dollars. But whenever you are selling this thing, you're just simply saying what? That euros will be weaker than what? The dollars. So you now want to be selling Euro USD simply means that the quote currency itself has more strength than the what? Base currency. But in the case where the base currency has more strength than the quote currency, you want to be doing what? You want to be buying the market. That is what base currency and quote currency is all about. For example, tomorrow now, if you see, okay, like this now we are now, you say that okay, the Nigerian that NGN is going to in the next maybe by February that Nigerian naira is going to be stronger than the US dollar. That is going to gain more value than the US dollar. What do you want to now be doing now that we are going to be buying what? You want to be buying naira against what the euro against the dollar. So you want to carry your money in naira to be buying what? The dollars. You get to. But if you now come and say that tomorrow by February that the dollars is still going to gain strength against the Nigerian naira, what do you want to do? You now want to be selling naira against what? The US dollar. You want to be what? Selling it. You want to be selling it. So if for example now, let me use naira and this thing dollars that is more convenient to us since many of us already knows that. Let me change this to naira. Symbol for naira is NGN now. Nigerian naira. So in a case where you're not saying something like this now, right? This is a currency pair because forex has to do what with the exchange of two currencies, two countries' currency. It just has to do with the exchange of currency. So you are exchanging one country currency to what the other. And then there's a way the currency used to be quoted. There's a way they used to write it. They write it in this kind of format. You either say NGN USD or USD NGN or Euro USD or any kind of form. But whenever you see a currency pair written like this, the first pair is always called what? The base currency. And then the second pair is always called what? The quote currency. You don't want to forget that. And then the base currency is, let me say, per se, that currency you have at hand. So in a case now where, for example, it's where you have 10,000 naira in your account, and then tomorrow you are reading a news of the country's economy, and then you're now saying that that the US dollar by February, the Nigerian naira is going to gain more value than the US dollar, in the sense that the value of naira to the US dollar, naira is going to have more strength, in the sense that naira is going to be of more value, yes, than what the US dollar. So whenever you hear that kind of thing, what do you want to do at that particular point? You want to buy more naira, right? You want to be buying more naira against the US dollar. You want to be doing what? Buying more naira. Because the more naira you buy, maybe you have 10,000 naira now, for example. You don't want to be doing what? You want to be accumulating more naira. That is, you want to use down your money to buy just more naira in the sense that in and then sell off your what? Your dollars. If maybe you have dollars and then you have naira with you. So you want to do what? Sell off your dollars to do what? Buy more naira. You want to be selling off your US dollars to buy more naira. You want to sell off your US dollars to buy naira. Because you know that by February, naira is going to gain more value than what? Than dollars. Because if you keep it that way and then it happens to be the naira gains more money than dollars and you have more of USD, what will happen? You'll be in a drawdown or you'll be in a loss. So if you have 10,000 naira with you, and then you have, because we are trading between naira and then dollars, right? So you have 10,000 naira, and then you also have what, $10,000. So in the case where you have 10,000 naira, you have $10,000, and then it comes and said by February, naira is going to gain more value than dollars. What do you want to watch out for? That means you want to do what? Be buying more of naira and be selling dollars. I remember I said forex has to do with the exchange of two currencies, and then it has to do with what, a buying and a selling. So as you are selling your naira, you are trying to buy currency. For example, you have naira here now, and you want to go to abroad, maybe the USA for holidays. What do? When you go there, you sell your what, naira to what, buy dollars, so you can have exchange. So there's always that selling and buying. So in a case where bombs and say that by February next year the naira is going to gain more value than the US dollar, what do you want to do? You want to be selling off all the dollars you have to buy more naira, because you know that by February, the more naira you have, the more profit you have in your pocket. Because the more dollars you have, the loss you have, because the value of dollar will be what, nothing. But in a case also where happens to come and say that by February that the naira is going to fall against the US dollar, in the sense that the US dollar is going to have more value than the naira. What do you want to be doing? You want to be selling off all your naira to buy more dollars. So when it now happens by February, you have what? More profit. That is what it simply means, having a base and a post currency. So when you have two currencies that are trading, it's just simply saying that you have naira and you have dollars. What they're just trying to wait for now is to know the direction or the strength of naira, what is going to be in the next few months, or what is the strength of dollars going to be in the next few months. So you now look at the news and say, wow, naira is going to be stronger than dollars by March next year. You now want to do what? Sell off your dollars to buy more naira, right? Or they now come and say that no, dollars is going to gain more strength than naira. You now want to do what? Sell off your naira and buy more dollars. So whenever you are buying NGN USD, that's whenever you are buying this currency pairs now, what it just simply implies is that you have a bias that in the next future naira is going to be stronger than this thing. So whenever you are buying this pair, you are selling off USD, which is the quote currency, to buy the original currency, which is the base currency. But each time you are selling this pair, what are you doing? You are selling the base currency, and you are doing what? Buying the quote currency. So the action they are doing in the market is going to be in line with what? The base currency. Because if you are buying the market, what are you doing? You are buying the base currency and selling the quote currency. If you are selling the market, what are you doing? You are selling the base currency and what? Buying the quote currency. That is what this exchange, that is how it happens in the market. So you want to be able to do what? Identify what the market or is most likely to do in the nearest future. That will now be able to give you what? A guide of what? How you want to trade the market. I don't know if you understand, guys. You now know what forex is. You now know how the exchange happens in the forex market. So now you have this idea. What else do you now want to do? You now want to be able to do what? Understand how this exchange is done. Right? You want to understand how the exchange is done. So in case of you forget what we explained, the video will be available. You can always go and watch. So you now want to understand what, how this exchange is done. So for example, we gave an instance of if you have $10,000 and then you want to buy naira. And I mean, you have 10,000 naira, you want to buy dollars, and at that particular point, exchange rate for dollars is 500 naira. You get that in the nearest future, if dollars now happens to increase to 800 naira, and you decide to sell it off, you'll be making about a 6,000 naira worth profit. We saw that previously before now, so I don't want to go ahead writing again. You can just rewind the video when we made the video available to see the analysis we gave them. So in that particular case, if you wait, if and then it can take up to 3 years to 4 years for naira, or even less, for naira to be able to what, climb for 500 naira per dollars to what, 800 naira per dollars. It might take up to 2 years, it might take up to 3 years, depending on the system or the government, or depending on how the economy is going to be. So does it mean that if you now put 10,000 naira in the market, you have to wait for 6 years, or I mean for 3 years or 2 years to be able to just make only 6,000 naira profit? No, it's not worth it. It's not worth the time, it's not worth the energy. So how then do we now try to accumulate and then be able to make money from the market? We use this process which we call leveraging. We use what we call leverage and brokers. So I'm going to explain how these brokers and then this leverage works. Let me explain brokers and then how this leverage works. So please permit me again to just write so I can explain this concept very well. If you have 10,000 naira and then you have, I'll just leave out the long statement. You have 10,000 naira and then the value of dollars at that particular point is 500 NGN per $1. So you have 500 NGN per $1. So and then you are now looking at trading NGN USD. USD simply means dollar. Now you're not looking at trading NGN USD. And then in the future, you're not saying back on and say that guys in the future that the dollar is going to gain strength. The dollar is going to gain strength against the naira, right? Maybe by March. No, let me say by December next year. Now, the dollar is going to gain strength. What do you want to be doing to NGN USD? You want to do what? You want to be selling. In other words, you want to be selling your Nigeria naira to be buying more of dollars, right? I explained this concept a few minutes ago. So the news came out and said that the dollars is going to be gaining more value in the next 6 months or in the next 12 months more than the Nigerian naira. And then you have 10,000 naira and then the exchange rate is what 500 naira per $1. So what do you want to do? Having seen that news, you want to be selling NGN USD in the sense that you want to be selling all the naira you have to purchase dollar, right? So what do? You now go to the exchange rate, you go to the banks, right, and tell the banks, okay, I have 10,000 naira, I want to buy dollar. By the time you invest the 10,000 naira buying dollars, your dollars, how many dollars will you now have? You'll be holding up to what? $20. So if you exchange now your $10,000, you sold all your naira to now buy naira. So you went to the bank, you sold all your naira. So the banks, please take all this naira and $1. What do you now do? At the end of this exchange, what will you be having? $20. That is now what you have at hand. So in the nearest future, maybe in the space of 1 year now, maybe in the space of one year interval, it now happen to be that dollar now rose from 500 NGN per dollar to 800 NGN, 800 NGN per $1. So price now happen to rise up from 800 NGN per $1. What do you now do? You now go to the bank and say, okay, you've held enough, you've held this position, or you've hold this money enough, you've hold this your $20 enough. You want to do Christmas, you want to do New Year, you have some expenses to run. So now it's time to change it back. And then you're in Nigeria, of course, you cannot spend in dollars. You now have to do what? Exchange it back to naira. What will you? And then the exchange rate at that particular point is now 800 naira. By the time you be exchanging your $20 at the exchange rate of 8,000 naira, what you're going to be making is what? 16,000 naira. 6,000 what? NGN. So your profit in the space of 1 year was equal to what? Just 6,000 what? NGN. So in the space of 1 year, you came back and then the profit you're making is what? 6,000 NGN, in the sense that you got your what? Your capital back with your 10,000 naira you invested plus extra 6,000 naira in the space of 1 year. So having seen this now, how then, in a case where the market now takes up to 2 years to rise to that point, are you now going to say that you invest 10,000 naira to come back in 2 years to collect 6,000 naira? No, it's not worth the time, it's not worth the waiting, it's not worth all those kind of things. So how then can one now become profitable? How then can Forex now really pay somebody to now become so profitable in the market? Now, the Forex market knows that individuals like me and you don't have enough capital to be able to trade the market. They know that we don't have. That is why in the olden days it's only banks that trade. And then how does banks trade? They can put up to $10,000. They can put up to $200 million trading the market. They can put up to $1 billion trading the market. They can put as much as they want. They know that me and you don't have that kind of money, right? So when the invention of computer, internet, and all these things came, and then so many bankers and brokers now came and said, okay, why don't we throw this window open to individuals so they can be able to trade, so they can be able to be profitable in the market? Why can't we just throw this video to them? This opportunity to them and then help them out. But and then maybe a question now rose and said that but they don't have enough money. If you put $10,000, which is about 5 million naira, into the market, it cannot profit you anything. It does not worth the wait. It does not worth the time. So the brokers will now come and say, okay, this is what we're going to do. Let us get their money, and whatever money they are willing to invest, let us multiply whatever the profit is going to be for them times 10, or let us multiply it times 100. So in the case where you're now investing $10,000 into the forex market, what your broker will be reading for you. So your broker now gives you, and then take note, the broker, in this case, your broker is a middleman between you and the market. Your broker, this is your broker here. This is the market. And then this is Charles. Right? So you as a person now, you don't have what it takes to go into the market. That is the forex market now. Let me write forex market. So you as an individual, you don't have what it takes to go into the forex market because of the capital resources and then every other thing you need. So what gives you access to be able to go into the financial institution to be able to now pull money or do any carry out any transaction is these people, this middleman they call what? The broker. So these brokers, they know that you don't have enough capital to be able to purchase something worthwhile or something that is worthy in the forex market. So what do they now do? They will now say, okay, bring your money. We're going to give you leverage options. The leverage options is you see different leverage options of times 10, you see different leverage options of times 20, you see different leverage options of times 100, you see some persons times 1000, times 500, times 200. So what the leverage simply means is that, okay, give me your $10,000. I will, through your $10,000 now, I'm going to multiply. The broker will now be telling you, okay, bring your $10,000. I will give you option of leverage. If you are choosing one ratio 50 or one ratio 100 or one ratio 200 or one ratio 500 or one ratio 1000, whatever option you choose, I'm going to multiply it by that. So your $10,000, for example, now you brought to invest into the market, the broker will now say, okay, I'm going to multiply it times whatever leverage you choose. So if you say time you chose a one ratio 500, so I'm going to multiply it times 500. So that is now you will not be having what 10,000 times what $10,000 times what 500. So it will now give you a larger opportunity to be able to do what buy more assets in the forex market. That is what the brokers do for us. And then so having to discover a good broker, having to know the right broker to choose, because some brokers are thieves. You get some brokers are thieves, some brokers they just want to take your money and do what? Eat all of them without you. So having to understand a good broker and then how to be able to identify them and then use them is also a skill in there. But there are some recommended brokers we're going to advise you to take when it's time to open a trading account. Right? So understanding what these brokers are is going to help you give you a good understanding on I mean understanding who a broker is going to help you choose the right option in how to approach the forex market. So this is you now. You now have a $10,000 account. Your broker is now saying, "I'm giving you an opportunity of 1 to 20, 1 to 50, 1 to 100, 1 to 200, 1 to 1000 leverage. Choose whatever you want, whatever capital it is. We're going to multiply it times the leverage you're going to choose, so you can be able to buy more assets in the financial market. So that is the major rule. And then whenever you want to buy, you don't just buy straight in the forex market. You place your buy order or your sell order through a broker to be able to access the financial market. That is how a broker. So they are majorly a middleman to what? To the financial market. They are middlemen to financial market. Right? They are middlemen to financial market. So this is what a broker is, and then this is what a leverage is. So you will now go on when we're now going to be looking at creating accounts. Sometimes you see a broker giving you a leverage of 1 to 20, or they'll give you a 1 to 50, or they'll give you a 1 to 100, or they're going to give you a 1 to 200, they're going to give you a 1 to 500, they're going to give you a 1 to 1000. Right? So these are examples of leverage. So what this leverage simply means now, these are leverages that the brokers will give to you. So what this leverage simply means is that if you have a $10,000, maybe I have $10,000 you want to use to go into the market. $10,000 is too small for you to place an order in the financial market. So the broker is just telling you, all right, bring your $10,000. We have the whole of this option of leverage. You choose the one you want and let us know. So let's now say you now happen to choose 1 to 20. What 1 to 20 now simply means is that your broker will take this your $10,000 and multiply it times 20 of the value, so you can have enough power to do what? To enter into the forex market. So each time you're making profit in the forex market, what will be appearing in your account balance is $10,000. So if you register, open an account, a trading account, what will be showing is $10,000 because that's your capital. But your buying power in the forex market is going to be, if you choose, in the case where you choose 1 to 20, 1:20, your buying power is going to, okay, I'm coming, I'll look at that. Let me just finish this. Your buying power is going to be what? Times 20 of what it is, what your capital is. So when you're now making profit in the market, instead of you to be making profit that is equivalent to your account balance, you'll be making a profit of times 20 of what you should. And then when you're losing also, you'll be losing times 20 of whatever value of whatever you're losing is in the market. So when you're choosing broker, you always hear the word don't over leverage in the market. You see some persons choosing leverage of 1 to 1,000, which is still good, 1 to 500. All of them, they are good leverage. It just depends on the kind of trader you are and how you can manage your risk. So if you choose a ratio leverage of 1 to 1,000, it simply says that you will now have in your account balance, you'll be seeing $10,000, but your buying power will be 10,000 times 1,000, which the brokerage offered and you chose it. And then whatever profit you'll be making from the market will be times 10,000. So for example, now in the case where you come and you have 10,000 naira and you want to buy dollars and the exchange of dollars is 500, like in that case, the profit you're making now is what? 6,000 naira in a year, right? You remember that illustration. So that 6,000 naira you're making in a year, if you are going through a broker eh, and you choose 1:20, your profit will be 6,000 times 20. You get it? And if you're making a loss and it's a 6,000 loss, your loss is going to be 6,000 what times 20. So this leverage, this broker offer it to you so you can have enough buying power. Just imagine waiting one full year to make 6,000 naira as profit. It does not worth the time, it does not worth the wait. But 6,000 times 20 is what? That's the money, 6,000 times 20, 120,000 naira. So at least it is worth the wait. So imagine you now waited for, maybe you choose a leverage of what? 1,000. So 6,000 times 1,000 is going to be giving you almost 6 million naira, right? 6 million naira. So this leverage gives you the opportunity to even help you redeem your time. So whatever profit you are making from the market with your normal account balance, you'll be making a profit times whatever leverage it is you chose. But whatever loss it is you are making from the market, you'll be making a loss of times whatever leverage it is that you chose. Taking a profit in the market, it magnifies it to times what? 20 or times whatever leverage it is you took. When you're having a loss, it's also magnifies the loss times this. So whenever you're choosing a leverage, is now choose a leverage based on what you can handle. Let me see if I can open this app as well. So, but when you go there, for example, now you will now have the ability to do what? To choose leverages. Let me see if I can open another. I don't know. Just trying to get. Ah, I don't know which account. Okay, let me search prosperity. And this is also a broker. You see that first broker open, the name of that broker is what? Derry. This is also another broker that allows you. This is what? Prosperity broker. So they have these things too. So you see a kind of leverages they can offer. So they offer leverages too. Right. So you have, look at this leverage. Look at this here. They offer a leverage of up to 1 to 500 leverage. I don't know why you can say that, a leverage of 1 to 500. So if you can trade up to that, fine, no problems. So the minimum deposit you can trade deposit with this is what? $10. So when you are depositing $10 minimum deposit, whatever profit you are making from the market, you will magnify it what times 500 if that's the leverage you choose. So the highest leverage that this broker or give now is what? Ratio 1 to 500. This will help you because when we now start opening trading accounts, right? When we start opening trading account and registering for trading account, it's going to help us know the right leverage to choose. And then if you choose leverage based on the kind of trader you are, you get that, fam. So that is it for leverage. That is it for what a broker is, and that is what for what a leverage is. You get that? So we're going to. I think there's also need for us to discuss spreads, but we'll discuss that in the next meeting. You open demo account. The purpose of the demo account is for what? Practice. So you can begin to practice how to take trades. You can begin to practice all these things, and then we can now open a live account where you can now fund if you have money, but you will not be trading in live account by yourself. This is just to enable you to be earning while you are learning. So when you're done learning, you can now start on your own and start trading on your own, right, fam? So we're trying to just create that window where you can be earning at the same time and you're doing what you're learning. So there are various applications using trading forex, right? So you have several applications that you use. So just download these applications before Saturday call, so you don't cost us, you don't make us to have delay. So just download it. You can download MT4 or MT5. Download one of these app, then download the trading view app. So these are the major apps I want you to download. Download the MT4, MT5, and then download the trading view. Just download only just these two apps. Then any other app again we're going to be needing in the forex market, we're going to let you know. So download this two app farm. They will now learn how to open an account, how to fund an account, how to withdraw from an account, how to choose a correct broker, how to be able to select the right leverage, and then we're now going to now look at those apps itself and how to use the apps, how to place a buy order, how to place a sell order, how to close a trade, how to open a trade, how to set limits, how to monitor your account balance, how to know when you're losing, how to then understand what we call pips, understand what we call what. So we understand what how to use MT4, how to use the MT5, how to use the trading view, how to be able to place a trade, how to withdraw, how to know when you're losing, how to know when you're, then understand how pips work. We get so we're going to be looking into these apps when we come on. Once we are done looking at the apps, we can now go into other things. So we can now go into studying forex, how to trade forex proper. So, but these are the basic understanding of forex that you need to know from. And then there are three ways to change. They had either trade through the fundamental analysis, using fundamental analysis, technical analysis, or what we call the fundamental, technical, or sentimental analysis. These are the three forms of analysis. So in our class, we'll now be looking at these three types of meta trader 4. MT4 is meta trader 4. MT5 is also known as meta trader 5. So download these apps. Just go to Google Store, type them, you will see them there. They don't have different types. It's just only one of these apps. So download them, keep them in your phone. You wanna look at these things. So look at what is expected of you to do in daily pips. So when you open the baby pips app or site, when you go to the baby pips, this is what you're going to see. Right? So you see something. This is how the site, whether your phone or your system. So when you go there, you now see this the road education. You click on education. Are you serious? Oh. I said when you get to babypips.com, so you will go to education, click on education. When you click on education, you scroll down. You now see the education, how to trade forex, all those kind of things. You click on start course. Click on start course. Once you click on start course, you now come and see different schools. You can sign in if you want to sign in. Then it's okay. They're okay. So you see different schools. School of Pipsology. That is the name of the school. So you now see preschool. So it's just a reading something. Look at then you can now have in the first school you have 11 courses, right? So the first school is what? This is one of 11 courses. Now, so you click on start course. Once you click, look at the course outline for preschool. The course outline for preschool is what? What you learn in preschool is what? What is forex? How do you trade forex? When can you trade forex? Who trades forex? Why trade forex? And then we'll now teach you of margin. I'm also going to learn on this later on. Then after that, you have what? The kindergarten. Look at the course outline for kindergarten, forex brokers, three types of analysis, and three types of charts. When you go down, you now look at the next course now elementary. course outline for elementary: support and resistance level, Japanese candlesticks, Fibonacci retracement, moving averages, and all those things. You now come to mid school. You can skip mid school. We don't need it for now. You're just saying so many things that we don't need. You can leave mid school, but you can read first, second one. That is, you can read preschool, kindergarten, elementary, leave mid school, then leave summer school, leave high school. You should just stop at this thing. Stop at elementary. That's what I want. So once you just stop at elementary, then from there we'll carry on from there. So it's just going to, this is going to help you have a better background knowledge of what forex is. They are very good. Like, I went from the preschool to the undergrad. Graduate diploma. So I went to from the course number 1 to 11. I finished it more than 3 times even before I started trading forex. Some persons are just too lazy to go and look at this thing, and you see them losing money up and down. So you just go through the preschool, then go to the kindergarten, and then go to the elementary. So once you do that, you can now have a good understanding of what forex is, fam. That's for the baby people.